It is 10:08 a.m. Pacific Standard Time. It is the 11th day of February 2026, and this is episode, episode is this, but 1255? Is it 12? Yeah, it's 1255 of Bitcoin, and Goldman Sachs bought Bitcoin. Amazing. Goldman Sachs holding some Bitcoin. That's going to start us out here on all the news that you can use about Bitcoin and macro around the world with me, your host, David Bennett, on the Bitcoin and podcast. Danske Bank going retail for Bitcoin, and then we're going to talk about interactive brokers. By the way, this is probably going to be a shorter show. It just can't be helped, all right? So please forgive me if you're looking for a full hour. We probably won't get there. A jobs report. Yep, jobs came out. Jobs looking good. You know what's going to happen, though? They're going to revise those puppy dogs on down sometime next month or the month after. UK regulator launches an enforcement action against HTX. I'll tell you why. Discord. Ooh, age verification on Discord. You knew it was coming. And now it looks like Discord is trying to, I don't know, muddy the waters, or they're not really walking back stuff, but they're trying to, I don't know, downplay stuff. And then we got a new Bitcoin miner. I'm actually talking about the physical machine. We'll end up talking about BitDeer and the Seal miner surpassing, well, a very large exahash per second. This is going to be interesting. Goldman Sachs, let's start there. Goldman Sachs discloses a $1.1 billion position in Bitcoin ETF holdings. Micah Zimmerman begins the day out of Bitcoin Magazine. Wall Street's Goldman Sachs has revealed an expansion of its crypto holdings. Reportedly, roughly $2.36 billion in total crypto exposure, including $1.1 billion in Bitcoin ETFs, according to financial holding disclosures. Bitcoin's portion of the haul, the largest of any digital asset listed, highlights just how far the venerable investment bank has shifted from earlier skepticism toward meaningful exposure in the world's largest cryptocurrency by market cap. The $1.1 billion position was in IBIT, BlackRock's iShares Bitcoin Trust ETF. Well, of course, Goldman Sachs is going to be cozying up to BlackRock before it cozies up to anybody else. I'll bet they're buddies over there when they go to black tie dinners. The SEC filings also revealed holdings of approximately $35.8 million in Fidelity's Wise Origin Bitcoin Fund, roughly $92,000 in American Bitcoin, and approximately $57,000 in Bitcoin Depot, which I've never heard of before, and various other Bitcoin mining or cloud-based companies. According to the filings, Goldman Sachs also had hundreds of thousands in IBIT calls and puts, so they're actively trading. Oh joy, I bet their trading desk is having fun lately. Goldman's path into Bitcoin began more than half a decade ago. You could also say 5 years, with tentative forays into the asset class. And in 2022, the firm executed its first known BTC-backed loan and a non-deliverable Bitcoin options trade, milestones that marked early strategic steps into digital assets. Yet, for much of its history, Goldman was publicly circumspect about crypto, with executives in earlier years distancing the bank from Bitcoin as an investable class. That posture shifted notably in 2024 when Securities and Exchange Commission filings revealed that the bank's first meaningful accumulation of Bitcoin ETFs occurred, including BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund. Institutional filings from that period show Goldman tripling its Bitcoin ETF stake within months, bringing its holdings to roughly $1.5 billion and making it one of the largest institutional holders of Bitcoin ETFs. Filings from today also showed that Goldman Sachs held shitcoins, Yeah, no kidding. Really? You think? All this is happening as Bitcoin has struggled to hold its footing above the psychologically key $70,000 level. Bitcoin saw a sharp sell-off last week. Yes, we know. And then they talk about Fibonacci retracement. None of that fucking matters. Two things matter. Goldman Sachs has a massive position in Bitcoin. And chances are good that they are also part of the problem that is keeping Bitcoin down below the 70,000 psychological mark. I think it's on purpose. I think the price is what it is, not because a whole bunch of people in retail and a whole bunch of OG whales sold off. I think this is all about paper Bitcoin. I think this is exactly what markets did to gold, to silver, that what they're doing to oil, what they're doing to everything, whether it's a commodity or whatever, it doesn't really matter. The only thing that they're not allowing or that they're not actually putting the squelch on seems to be the legacy financial equities market, because Dow is banging right up against a brand new all-time high. NASDAQ's recovering, S&P's recovering. And even if you just look at the last couple of weeks on the day chart for all those three indices, we could do the S&P mini as well. All of them are bouncing around all-time highs and have been for days. All right, so there doesn't seem to be a cap on those things. And that makes sense, but I won't get into reasons why. Just think of it this way. Pension funds buy stocks. Trump has put $1,000 in all, like if you're a baby born between January 1, 2025 and whatever, you're getting $1,000 put into your account, except it's going to not just be cash in an account, and he's not buying Bitcoin, but he is going to be directing the people that manage those accounts. You get it? Because they're going to take a management fee. He selected somebody to actually be the third party, management system for this baby fund. I can't remember what it's called. And it's all going into equities. It's a way to shore up the stock market, because those are the numbers that matter globally to anybody that's in power. All the rest of it, oh, well, the little people like Jamie Dimon, they can tell their trading desk to keep the lid on all the rest of this shit so they can continuously form their positions until they want to do the pressure release valve. Right now, it's all about equities. Everything else is basically being manipulated. And the second paper Bitcoin became a thing, and that really did come into play over paper Bitcoin summer, we are now seeing the effects of it. So that's what you get when you have paper stuff. Danske Bank opens retail Bitcoin access after years of resistance. Nice. Bitcoin Magazine, also written by Micah Zimmerman. Denmark-based Danske Bank will now allow customers to invest in cryptocurrency-linked products tied to Bitcoin, marking a shift from Denmark's largest lender after years of resistance to that asset class. The bank said customers using Danske e-banking and Danske mobile banking can now gain exposure through exchange-traded products, or ETPs, that track the performance of Bitcoin or another shitcoin. Or a shitcoin. I'm tired of mentioning its name. The offering includes 3 products at launch, with 2 linked to Bitcoin and 1 linked to something stupid. Danske Bank framed the move as a response to growing customer demand for access to digital asset markets through traditional financial channels. And the bank said that the products are intended for customers who trade through its platform without receiving investment advice. You don't even get advice. They're just going to let you do it, man. Kirsten Leisholm, head of investment products and offerings at Danske Bank, said that the lender had seen a rising number of inquiries from customers who want cryptocurrency exposure as part of their portfolios. She pointed to stronger regulations across Europe, including the EU's marketing crypto assets regulation, as a factor that has increased confidence in the sector. The ETP structure allows customers to invest without holding Bitcoin or Ethereum directly, removing the need for digital wallets and private key storage. The group said this provides a simpler route for investors while reducing operational risks linked to self-custody. The bank also highlighted that the selected products come from established providers such as BlackRock and WisdomTree. The bank said the ETPs fall under MiFID II regulations, which require investor protection measures and transparency around costs. Yeah. Before customers can trade the products, Danske Bank will require, a suitability assessment. Investors must answer questions designed to confirm that they understand the risks and characteristics of cryptocurrency-linked investments. Oh my God, it's like a CAPTCHA. You got to pass a CAPTCHA so they know that you're not apparently stupid or at least ignorant. Oh my God, this is... Will you change my diapers too, Danske Bank? Please, please, please. The decision marks a reversal from Danske Bank's earlier stance. If you will remember, in 2018, the lender refused to support cryptocurrency trading and actively warned customers against investing in digital assets, maintaining an internal restriction as recently as 2021. Leisholm said that the new access should not be interpreted as an endorsement of any cryptocurrency, but as a way to meet customer interest within a regulated framework while maintaining strong warnings about risk. Despite offering access, the bank stressed that it does not view cryptocurrencies as part of a long-term portfolio strategy. The bank said it does not provide advisory services for these products and described them as opportunistic investments that carry the potential for significant losses. So that is 100% cover your ass. They had to offer these products. Why did they have to offer the products? Because their customers demanded it. Let me read this sentence. The lender has seen a rising number of inquiries from customers who want cryptocurrency exposure as part of their portfolios. This was driven by the street. Danske Bank's decision to allow Bitcoin exposure to their customers was 100% driven by their customer base. It came from nowhere inside the bank. They have to respond when a preponderance of their customers start saying, I want this exposure. And these people know at the top of these banks that they are basically, they're like anybody else. If you're not going to sell the brand of clothes that I want in your store, then I am going to go buy it from another store. If you do not offer the kind of food I want in your restaurant, I will not be eating at that restaurant. I will go to another restaurant. It's just retail basically saying, I want this. And by God, either you give it to me or I'm going to find somebody who will. That's what Danske Bank has done. It's not from the inside. This is pressure from their customer base. That's extremely important to realize. This is not a FOMO. This is not a position inside the bank where they, did customer, what do they call them? Where they get a whole bunch of people and pay them $50 to sit, a focus group. Didn't come out of a focus group. The focus group basically was a whole shitload of their customers said, I want this, give it to me now. And Danske folded like a cheap suit. And the only thing that they can do at this point is basically do a whole bunch of, we'll offer it, but if I were you, I wouldn't buy it. And if you do, don't keep it as a long-term part of your portfolio. Okay, well, whatever. I think you guys will be fine over there at Danske Bank. From Atlas 21, Interactive Brokers adds nano Bitcoin and shitcoin #1 futures via Coinbase derivatives. Okay, before you scream, nano Bitcoin is not a shitcoin. I'll explain what nano means here out of Atlas 21. Interactive Brokers has added coin-based derivatives, Nano Bitcoin, and shitcoin futures to its trading platform, expanding access to regulated crypto derivatives with 24-hour trading availability. The new products include monthly expiry futures contracts and perpetuals designed to closely track spot prices. Nano Bitcoin futures represent 0.01 BTC, and then they talk about shitcoin number one, and I don't care. Quote, perpetual crypto futures have become popular among traders because they provide long-term exposure and greater flexibility, said Milan Galik. Sorry. Jesus, my inner Beavis and Butthead is coming out. CEO of Interactive Brokers in a Tuesday statement. And then he added that the smaller contract sizes reduce margin requirements for eligible clients. That's what they mean by nano. Technically, yeah, it's a shitcoin because it's not actual Bitcoin. They're buying it on behalf of their clients, and what they give their clients is essentially a paper claim to these very small bits of Bitcoin, but that's where nano comes in. 0.01 Bitcoin futures contracts is a very low amount of Bitcoin, right? So that's what nano means here. It's not, they didn't spin up a blockchain. They're not doing that. It's just a product that tracks the price of Bitcoin, and you can just get in at very, very low amounts of Bitcoin, unlike a whole bunch of other products. Now, Greg Tussar, head of Coinbase Institutional, emphasized that nano contracts are intended to broaden access to crypto derivatives within a regulated framework. Coinbase Derivatives operates as a regulated futures exchange in the United States under Coinbase, which entered the derivatives market through the acquisition and rebranding of something called FairX. The $2.9 billion acquisition of Deribit back in August of 2025 expanded this focus and strengthened the company's ability to offer options, futures, and perpetuals. Interactive Brokers offers trading access across 170 global markets from a single platform and has increasingly integrated crypto products alongside traditional assets. And earlier this year, the company enabled 24/7 funding using USDC and signaled plans to support additional stablecoins from PayPal and a terrible, terrible name in the space that I won't even mention because they're just all a bunch of thieves. So Interactive Brokers now getting in on everything. And this may be why Paper Bitcoin Summer was created and all that paper Bitcoin floating around to keep the price of Bitcoin suppressed, while all these people like Interactive Brokers are able to get into position. Because, I mean, even if you don't have a Bitcoin position yourself, i.e. you actually buy and hold the asset, you still can miss out. Like Interactive Brokers would not want to miss out on these nano Bitcoin futures contracts. It's a good time for them to launch this product, isn't it? Because right now we got price suppression. We're under $70,000. This is a great time to get positioned in Bitcoin. And get positioned in Bitcoin does not always mean buy Bitcoin and hold Bitcoin. Not for these people. They don't care. They're just looking to make money on fees. All right. So just let's be very clear about that. But positions can mean different things. I have a position in Bitcoin. I bought Bitcoin. I hold Bitcoin. That is a position. If I have a company that wants to trade in Bitcoin, I don't want to open up a product right at the top of the market. I would much rather see a collapse of the market, a steady state situation occur, then announce my offering in the Bitcoin space, and then just wait for the pressure cap to be released. And I'm sure at one point or another, my good friend Oshi knows about pressure. Maybe he pressure cooks stuff. Well, I don't know. Why would he be cooking stuff? Because he has been back in the kitchen. Finally back in the kitchen. Thank God. He does have HODL butter. He doesn't have the crunchy coffee huddle butter, and he doesn't have any of that nice Bitcoin Beans branded Oshi huddle butter either. He's out of stock on that, and he's out of his huddle bars, but he does have huddle butter in 16-ounce jars. What, may you ask, is huddle butter? Well, it's like peanut butter, except it's not. The ingredients are this: pecans, maple sugar, not maple syrup, maple sugar, sea salt flakes, cinnamon, and black pepper. Ground pecans, maple sugar, sea salt flakes, cinnamon, and black pepper. It's kind of like peanut butter insofar that it is a nut, and it's got stuff in it, and it's been ground up, and it's kind of pasty, and you can spread it on stuff, but that's where it ends, because this is absolutely fantastic food. There's no preservatives, there's no extra chemistries, there's no Blue Lake number 6 food dye. No. He makes this stuff by hand, and he makes it in small batches. He so happens to have 8 16-ounce jars of huddle butter ready to go. And you, my friend, can buy it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services. But if you do buy it, like I said, you will be buying it in Bitcoin. And now we've got 130,000 people that can afford to do that. Why? The jobs report came out. U.S. added stronger than expected 130,000 jobs in January, with unemployment rate falling to 4.3%. Let me just translate what that means. Less likelihood that the Fed lowers rates, because employment is one of their mandates. And with 130,000 jobs added just in January and a falling unemployment rate, it means that their position that they've taken on interest rates is working. And there's no reason to change that. It also makes it less likely that they'll hike rates. Well, actually, it makes it more likely that they'll hike rates, less likely that they'll lower rates. But what's probably going to happen is that they're going to keep rates the same because of this, or at least until they revise this jobs report down. You know exactly what I'm talking about. They added 130,000 jobs. They blew past the 70,000 job mark that experts were expecting. You know what's going to happen? They're going to revise it down to 25,000 jobs next month, and nobody will remember, because that's what they do. Steven Alfer out of CoinDesk is going to give us the skinny. There were 130,000 jobs added in January, according to a Wednesday report from the Bureau of Labor Statistics. Economist forecast had been for 70,000 jobs added, up from jobs growth of 48,000 in December. The unemployment rate fell to 4.3 versus 4.4% that was printed in December, and trading in a tight range close to 69,000 for much of the week. Bitcoin had dipped back down to 67,000 area in the hours prior to the report. In the immediate aftermath of the strong data, Bitcoin rose to 67,500, though still down 2% over the past 24 hours. U.S. stock indices are continuing with modest gains. The NASDAQ 100 higher by a half point, S&P 500 by a half point. Lower earlier, the dollar is now higher on the session. That's good. And the 10-year U.S. Treasury yield has jumped 5 basis points from 4.15% to, do the math, take a toke and do the math, 4.20. After having cut rates multiple times in the second half of 2025, the Federal Reserve held policy steady at its January meeting, and members showed little inclination to resume rate cuts at the bank's next meeting in March. Well, ahead of the morning's job numbers, interest rate traders were placing just a 21% chance of a March easing, according to CME FedWatch. Just following the report, those chances dipped to 19%. Like I said, like clockwork, they're going to revise those numbers down to a number. This is my prediction. Next month, whenever it is that they do the revisions, whenever the revision report for this month's number or the January employment numbers comes out, I think it'll be next month. I'm not sure. I think the numbers will have been not only revised down, but revised down to a number below what the experts expected. And if we had gotten those actual real numbers today, we would not see a dip in the chances of a Fed rate cut. We would see an increase in the percentage chance of a Fed rate cut. That's how these people manipulate the markets. It's so transparent to me now. That's one of the things that Bitcoin has taught me. You cannot understand Bitcoin without understanding macroeconomics. And the more you dive into Bitcoin, the more you start realizing, oh shit, the 10-year yield actually is important for various reasons because it affects this, this, and this. And after a while, you become so steeped in it for so damn long, you sound like your high school economics teacher. Boring and unfunny. Let's run the numbers. CNBC, futures and commodities, energy all in the green today. Brent North Sea up 1.5 points. West Texas Intermediate is up 1.6% to 65.03. Natural gas up 2 points to $3.17 per thousand. And gasoline is up 1.6 to $1.99 a gallon. Murban crude up 1 1/3 to 69.95. Both Brent and Murban just about to break the $70 mark. Metals are also in the green today. Palladium up 0.5. Gold is up 1 1/4 to $5,095 4 dimes. Platinum is up almost 2 points, while silver rocking it out 4.5% to the upside, back to $84 you go. Ag is fully mixed today. Biggest loser is sugar, 1.8% to the downside. Biggest winner is wheat, 2.18 percentage points in the green. And live cattle is up 1.5%, while lean hogs down 1 1/3. Feeder cattle up 0.75 point. The S&P is moving sideways, slightly in the red. NASDAQ is moving slightly in the green. Moving sideways, slightly in the green. Dow is down a full 0.25 point, and the S&P Mini is down a full 0.5 point. So I guess the exuberance of the jobs report has already kind of worn off a little bit. Now, Bitcoin at $66,840. That's a $1.34 trillion market cap. We can only get 13.1 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,987,523.03 of. Average fees per block are normal, 0.02 BTC, taken in fees on a per block basis. There's about 50 blocks carrying 32,000 unconfirmed transactions waiting to clear at 3 sats per VByte. Low priorities get you in at 2. Hash rate is exactly 1 zettahash per second. Exactly 1 zettahashes per second. That's more defensible hash rate on the Bitcoin network than you would ever need. Security, your security is confirmed. That's what that number means, by the way. Fake Bitcoin, which was yesterday's episode of Bitcoin and Nostr Gang with a short row stick, says boost. Well, boost back. Nick Dose with 147 says cheers. Well, cheers. Yodel with 500 says BitThumb story is very interesting. Yeah, and it's probably going to get more interesting, and that is the weather report. Welcome to part 2 of the news that you can use. UK regulator launches enforcement action against HTX over illegal financial promotions. Their commercials must have sucked. Callan Quinn added Decrypt has this one. The UK's Financial Conduct Authority said on Tuesday that it had begun legal proceedings against HTX, the crypto exchange founded by Tron creator Justin Sun, for, quote, illegally promoting crypto asset services to United Kingdom consumers, end quote. Yeah, illegal commercials. The action comes under rules enacted back in October of 2023 that mandate firms providing crypto services comply with measures to protect said consumers from unfair and misleading marketing. Well, I guess Justin Sun just didn't care. The regulator said in a statement it had previously warned HTX, formerly known as Huobi, about its advertising in the UK. Quote, HTX operates an opaque organizational structure, hiding the identities of its owners. No, we know who Justin Sun is. Sorry, but that's a lie. And the operators of its website. Repeated attempts by the FCA to engage with FTX have been ignored, the regulator said in a statement on the website. It added that, quote, since issue of the proceedings, HTX has taken steps to restrict new UK customers from registering an account. However, existing UK users can still log in and access unlawful financial promotions. And HTX has given no assurance that the changes will be permanent. The FCA therefore remains concerned that the risk of ongoing breaches continues. Wait a minute, hold on. So you're telling me that I can't even run a self-promoted ad on my own website and show it to a UK, then why the hell would I be on your website in the first place? If I've got to log in, then I already have an account with HTX. So here I am, I'm a happy ass sitting down to go do a little bit of day trading on Ethereum and get my ass handed to me. And the first thing I need to do is log into HTX. And I do that because I've got an account. I'm registered. Everybody knows it. And then an ad for HTX crypto stuff comes. Buy Polymarket or buy whatever. Buy Solana. Yeah, buy some Solana. Apparently, the UK's got a problem with even that. I've got an account with HTX, and HTX is only promoting itself on its own website, and apparently even that shit's illegal. Come on, dude. Treat me like an adult, please. Anyway, the block appears to have already taken effect on several sites. HTX's Facebook page, no longer accessible in the UK. It's replaced with a message stating, quote, content not available in United Kingdom. This is because we complied with a legal request to restrict this content. So Facebook at it again, bending over the kitchen table for anybody that wants it. Wow, what a weak sack and spine that dude has. Poor Mark Zuckerberg. In its Instagram and TikTok pages are also not accessible, though its X and YouTube do remain unblocked. HTX did not respond for a request for comment. The FCA is shoring up its crypto provisions following a proposal by the Treasury in December to extend the FCA's remit beyond current focus on anti-money laundering provisions. It is currently consulting on new rules covering areas such as consumer duty, conduct, and oversight for crypto firms as it moves toward bringing crypto regulation more in line with that of traditional finance. A full crypto regulatory regime is slated to launch in the UK in 2027, with applications for licensing opening later this year. Over the past few weeks, several firms have been granted licenses, which bring them under the scope of the FCA's anti-money laundering regulations, and this week, blockchain.com secured FCA registration in the UK following a shitcoin company in January. Quote, securing this registration puts us under active oversight immediately, a spokesperson from blockchain.com told Decrypt. Quote, instead of waiting for legislation, blockchain.com is now operating under the same rigorous standards as traditional finance and banks in the United Kingdom. Steve Smart, Joint Executive Director of Enforcement and Market Oversight at the FCA, said the advertising rules were, quote, designed to support a sustainable and competitive crypto market in the UK, ensuring that consumers have what they need to make informed decisions. End quote. Another quote, HTX's conduct stands in stark contrast to the majority of firms working to comply with the FCA's regime, he said, noting that it was the, quote, first time we've taken enforcement action against a crypto firm for illegally marketing their products to UK customers. Smart stated that the FCA will, quote, continue to act against firms who ignore our rules. You're not even allowed to advertise yourself on your own website after a customer has to securely log into that website. It's not what it sounds to me like. It's not. And not a fan of Justin Sun, but let's be clear about this shit. Justin Sun is not pasting posters down at Piccadilly Circus, right? He's not putting them on walls. He's not buying ad space down in time, at wherever, what's the center of London? I can't remember the name of it. Anyway, he's not buying ad time on screens. He's not putting shit up on highways. As far as this sounds to me, he's advertising for stuff on his own website, and you don't even see that unless you actually log into the website. And if that is true, if I've got that correct, then the UK is in deep, deep, deep trouble because it's just clearly turning into a huge nanny state. Speaking of nanny state, Discord. Once a place where you could actually post whatever the hell you wanted to post, well, now we've got a problem. But Discord is downplaying the timing as well as the impact of its brand spanking new age verification policy. If you didn't think Discord wasn't going to fall in line, well, I got bridges in Arizona to sell you. Discord attempted to reassure users on Tuesday about its plans to implement age verification, saying most will not need to scan their faces nor upload government IDs. Under its new age assurance system, expected to come in March, users will only be required to verify when accessing 18 and over servers and channels or when attempting to modify certain safety settings. Quote, as part of our ongoing commitment to teen safety and well-being, we decided to evolve how the platform helps keep users safer by introducing Teen by Default, a teen-appropriate default experience for all new and existing users worldwide. We're all going to be treated like teenagers, no matter how long you've been on Discord. We're all going to automatically be treated like teenagers. And then if we want to access anything outside of the realm of what is quote-unquote appropriate for a teenager, we're going to have to verify our identity to Discord. You're not downplaying a goddamn thing. What you're doing is you're lying through your teeth, and you're doing it by twisting words, twisting function. We're going to have to actually do this. If we want anything that they deem is inappropriate for teens, we will have to AML, or rather a KYC ourselves. This is just, the nanny state is just getting really, really, really bad. We're going to have to do something about this, y'all. I recommend Nostr, where none of this fucking stupid shit ever happens. Sorry. In a Tuesday post on X, the official Discord account said that the vast majority of users can continue using the platform without ever being asked to confirm their age. Quote, we use age prediction. Oh, God. Is it AI based? We use age prediction to determine with high confidence when a user is an adult. This allows many adults to access age-appropriate features without completing an explicit age check. Yeah, I don't buy that for a second, pal. The move follows online backlash and users seeking alternatives, with some reports estimating a surge of more than 10,000% in online searches in February compared to the month prior. Discord said most adult users will be assigned to an age group using internal age prediction models based on account signals. Signals. Your account signals. Only when those systems cannot determine adulthood with high confidence, users will only then be asked to complete additional verification through third-party partners. What is that? Security hole. Third parties are secure. Untrusted third parties are security holes. When verification is required, Discord said facial age estimation runs entirely on a user's device and is not transmitted to the company or its vendors. Yeah, call bullshit on that. Government IDs are used only to confirm age and are deleted afterwards. Bullshit. Discord said it receives only a user's age and does not associate identity documents with user accounts. Also bullshit. Do I know this for... David, do you know that for a fact? You're calling bullshit on all three of those things. Do you know that for a fact? No, I don't. And it's still bullshit. Age verification on social media is gaining global momentum, y'all. Earlier this month, Telegram CEO Pavel Durov called out Spanish regulators on X, saying such measures were pushing dangerous new regulations that threaten internet freedoms. Those sentiments were echoed by the Electronic Frontier Foundation back in January, which said 2025 was the year age verification went from a fringe policy experiment to sweeping realities across the United States. In December, Australia's Labor government banned the use of social media for under 16s, citing concerns over child safety. They don't care. It's bullshit. That initiative has largely failed. Why? Because teens are already reporting on how to easily circumvent age-restricted controls. You thought you were going to do what with these guys? You really thought that they're that dumb? That there's no innovation? You're treating them like they're 4, not like they're 14. Right? Do not make that mistake. If you're about to have children and you think you can put one over on your fucking 10-year-old, think again. Because these dudes are smart. And all of them are. The only reason you end up with stupid people is because they either get browbeaten inside of their family or they get browbeaten to death inside of schools by people who have been browbeaten by their own families. Otherwise, kids are brilliant. They have the most insane knack to figure out ways around anything. Whatever. That's why it's largely failed. But Discord's Battleditch said a specific legal requirement had no bearing on the timing of the policy change. Oh my God, quote, this was a part of our proactive, ongoing commitment to teen safety and well-being. The global teen by default experience is not driven by any single regulation. Privacy advocacy groups, however, say those assurances ask users to, trust the company without any way to verify any of those claims independently. That's why I'm calling bullshit. And even if you had proof, you better fly my ass on a plane, buy my ticket, put me up in a hotel room, take me to your company, and let me interview every single fucking person that has anything to do with this shit. And even then, I may not believe you. But if you did that, if you took those kind of measures to prove that you were above board about not linking my identity to my age and those things to my account and those accounts back to my government, then I might believe you. But without that, 100% lies. They're lies. They're asking folks to trust, said Suzanne Bernstein, counsel at the nonprofit Electronic Privacy Information Center. Quote, many companies already have all this information anyway. So there's sometimes a false choice in terms of what information we have control over. Our privacy. Bernstein said that the issues go beyond Discord and reflects broader limits on the user control online. Quote, this shows that often, as consumers, we don't have a lot of agency over our own information if we want to engage online, which all of us do or have to do in some scenarios, she said. Use nostr. Please, for the love of God, stop prancing around. Stop figuring out a way to say, well, I don't use nostr because it's not built well yet. It's slow in some circumstances, and I don't want to look around for a client that fits. You know what? Stop it. Just go get on nostr. I don't care what client you use. Even if you pick the worst client out there. Some clients are good. Some clients are not so good. Even if you picked out the not so good client, figure it out. This is the time to figure it out. You cannot. Dominoes are falling in age verification on social media shit online faster than any other line of dominoes you've ever seen. If you do not claim your namespace on nostr right now, then you're going to be beholden to all these idiots. Trust me, idiots suck. You don't want to be beholden to them. Let's hash it out, shall we? But this time with BitDeer, Seal Miner production surpasses 65 exahashes per second. Atlas 21 is bringing it to you, and for whatever reason, it didn't come up for me. So, here we go. Finally, the words appear on my screen. BitDeer Technologies Group has released its operational update for January 2026. The report reveals record growth in its BitDeer Seal Miner miners and a decisive pivot towards artificial intelligence infrastructure. Damn it. Since the launch of the production line, the Seal Miner family has reached a total production capacity of 65.1 exahashes per second. The Seal Miner A2 model represents the backbone of this expansion with 44 exahashes per second produced since operations began. The more recent Seal Miner A3 has already contributed 8.7 exahashes per second deployed with an additional 0.4 exahashes per second in transit, and 3.8 exahashes are still under assembly. The company's stated objective is to use Seal Miner units to progressively replace third-party miners in its self-mining fleet, which currently stands at 63.2 exahashes per second, marking a 14% increase compared to December 2025. Excess hardware will be placed on the open market to generate additional revenues. Alongside the expansion of its mining segment, on January the 13th, 2026, BitDeer activated its first enterprise scale GPU cluster at its site in Malaysia. The infrastructure combines 1,792 next-generation NVIDIA GPUs, including H100s, 200s, B200s, and GB200 units, dedicated to supporting AI training workloads, of course. At the time of the report, the cluster was operating at 41% capacity utilization. Matt Kong, I wonder if he's the chief business officer at BitDeer. Do you think they call him King? If you're not calling your chief business officer, whose last name is Kong, King Kong, missed opportunity, and I feel sorry for you. Quote, BitDeer has increased its focus on HPC/AI co-location opportunities for several of its larger sites, including, but not limited to, Tidal Norway. This is a high priority for us, and the goal is to sign long-term lease agreements for these locations as soon as possible, end quote. Again, that would be King Kong. On the mining front, in January, the company mined 668 Bitcoin, representing 430% increase compared to the measly, piddly-ass 126 Bitcoin produced in the same period of 2025. As for reserves, BitDeer still held 1,530 Bitcoin as of January the 31st. That's actually down from 2,017 Bitcoin the previous month, likely due to partial liquidations to finance infrastructure expansions. So there it is, ladies and gentlemen. Episode 1255 in the bag with all the news that you could use. I hope you have a wonderful day. I told you it was going to be short. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.